Good morning, good afternoon, good night, wherever you're tuned in from. Welcome to the BitLab Academy daily live stream. My name is Kellam. Welcome to the show. The markets, man, what a crazy day yesterday, right? We were getting that strong push up and then huge sell off. I had an appointment midday, and I came back and I pulled up the charts, and it was just like you feel like a dagger in your heart. But then you realize you have a plan. And that's what this is all about, is being okay with any eventuality, no matter what direction markets go, no matter what happens, you have a plan. So is it over? Is this shakeout over? Is it going to continue? Well, let's dive into the charts today and let's figure it out. Throw a 1 in chat if audio, visual, everything's sounding good. Throw a 2 in chat if you're feeling good. Throw a 3 in chat if you lost some money yesterday. Put a 4 in chat if you lost some money but you learned something. Put a 5 in chat. You're tired of me saying numbers. I'm just trying to get the engagement going here in the chat window. I want this community being engaging. All right, sorry, I was having a little issue there on my screen. And also throw in some of the projects you want to look at today. We're going to be doing a lot of TA. We're going to look at a little bit of the news. We're going to try and identify kind of what's going on there. But I just want to make sure every one of you, this is a community. This, again, is not about me just sharing my thoughts on the market. It's about sharing ideas, the concepts, the strategies, bridging that gap from beginner to pro. And again, welcome to the show. If you have not yet done it yet, hit that like button, hit that subscribe button, ding that bell. It's the best and easiest way you can help contribute and be a part of this channel. Now, jumping in here, make sure you come over to the BitLab Academy daily posts that we do here, which is at Academy BitLab. This is the page. Follow us over here. And once you follow us, make sure you come here, retweet the daily tweet, and hit that heart button here, hit that like button. It's an easy way that you can help support what's going on here. Get the word out where people can come and learn about what's going on in the markets rather than have somebody just talk at them. It's supposed to be a conversation. We're supposed to be sharing our experiences here. And I really want to encourage you all to ask some more questions and, ask some questions in the chat. And I'll have my Discord open for my mods. If there's any poignant questions, that need highlighting. If it's not a super chat, then it's sometimes those questions go by the wayside just because I might be paying attention to the charts, whatever. So I want to make sure everybody gets a little more engaging because this is supposed to be a discourse, and I want to make sure we are providing the content that you want and answering the questions that you have about what's going on. So come over here to the daily post, as you can see here, that I have up on the Academy BitLab page. I also have it pinned in the top of the chat. I'm having some weird issues on my computer. Okay. And come and retweet this. Get involved. You're going to be entered to win. I'll give back. We give back here. Be entered to win some stuff. We've given away $100 before. We've given away lifetime memberships to BitLab Academy, as well as the indicators we have. We've given multi-month. We've given all kind of stuff away. So come and be a part of this. I want you to be able to engage with this community and also have a chance to get something back other than all the knowledge that you get here in BitLab. If you've ever learned anything in this stream, throw a lab coat emoji. And you see Crimson Caravan Company, he threw some lab coats. Throw some lab coats in the chat. If you've ever learned anything on this channel, we're going to get this popping today. Now make sure, again, you're going to come and retweet this. Now come over after you do that. Make sure you come and give me a follow right over here at Kellam. I share a lot of good stuff here. And we reference a lot of it on the charts as well. Yeah, come give me a follow. We should be doing our crypto answered this evening. I have to check in with Crypto Vet and my other guys that I do this with. But I just want to say, first off, how much I appreciate every one of you being here on all these streams. There's so many people. I mean, there's people I've seen that haven't missed one stream since I started. And the majority of you I see almost every day in here. So I just want to say how much I appreciate all of you and how much it's wonderful to build a community. And I mean, let's agree here. I mean, one of the things that I love about what we're doing, and it's not me, it's you all. One of the things I love about what we're doing here on this channel, and again, this is about you guys, not me, is that this is a channel about empowerment and support and community. And I don't feel like I'm coming to work when I come to do these streams and be here with you all. I feel like I'm coming to check in with my family. So I just want to say how much I appreciate you all. Now with that, let's go ahead and dive into some of these charts. Let's figure out what the heck is going on. I've been kind of a whirlwind of things while because I'm in, of course I live in New York, but while I've been in Atlanta, my sole purpose of why I came back this time is because I can live stream from my place in New York. But my sole purpose is to get this new website launched with the new BitLab Academy content, all the new stuff. I mean, new courses, new structure, new lesson flow, all video content with quizzes and study materials, resources for you. Of course, all of this comes also with the premium Discord for the all access members, but it's not all going to be paid course stuff. We have a lot of free content that's going to be in this as well for the beginners, because we want to make sure everybody starting in crypto has a good fundamental layer of what's going on, learning about what is Bitcoin. And it's not one the Bitcoin 101 course is 6 videos, because we want to break down really some of the history, where it came from, why it's important, what it is, blockchain 101. So, and then we have all these other courses as well, as you can see scrolling across the screen here. I mean, this is just the first batch of courses that we're launching with. And each one of these, I mean, on-chain analysis has 20 lessons in it. Trading fundamentals has 20 or 22 lessons in it. We go through all kind of different indicators, not just the BitLab indicators, but the fundamental indicators that you need to understand, so you understand what RSI is and stochastics and all the things that you need, and volume and all the things that you need to have a good launching point so you can form your own strategy. And then, of course, we do have strategies that we share as well. And again, as I said, this is only the first batch of lessons and courses that we are releasing in this update, where we're doing the new website and all this new I mean, it's probably like 4x more content than what is currently on BitLab. So I want to really encourage everybody to head over to bitlabacademy.com if you haven't yet. Get involved, sign up before we roll this out, because the prices will be going up. And if you join before then, you get to keep the lower prices for the life of your membership. So I think it's time to jump into the charts. How's everybody doing? How you feeling? We got 102 people in the room, 46 likes. Let's get those likes up. We're gonna break down a lot of charts today. So I'm gonna keep the chat window up today, because I want to catch any important questions or thoughts that scroll by. So if you see me looking off to the side, I'm not having a stroke. I'm reading your lovely messages. Chemistry Bro, what's up? King Peasant, Diamond Sauce, Alexandra G, my main girl over here. Thank you so much for all the help and all the work that you do here in the channel, Alexandra G. I really appreciate you. I see you. I appreciate you. Mellow Fellow, what's up? Nice chatting with you yesterday. I'm going to be getting you included in that mod gift that I'm giving a gift to the mods for all the help that they do here. Who else we got in the house? Crimson Caravan Company. Who else? Justin Eubanks. I bet GS is in here. I bet all the people are in here. Yeah, GS was the first one. Taz Gogs, Crypto Kid, We Bomb, yo. Crypto JMP, unforgettable name. There's so many people in here. I appreciate all of you. Crypto 420. It's a lot, man. I just appreciate you all. All right, now let's jump into these charts. That's what we want, right? We want to talk about what's going on in the market. So let's jump in. We're going to do a little bit, before we jump into the charts, we're going to do what I like to do in the morning. I'm going to walk you through my routine when I'm trying to figure out what the heck is going on in the markets. So I always start, what do we do always first? We zoom out. So if being zoomed in is looking at the charts, what's the next layer above that? Just getting a general feel about what is going on in the markets, what's going on in the world. I think we all need to be aware of the, I can actually come over here to, by the way, so you all know, I had a whole window set up with about 15 different tabs of stuff I was going to share. And I had to restart my computer before we started, and I lost all my tabs. So we're going to be doing this together today. But what I wanted to show is knowing that what's going on, zooming out, just not in Bitcoin and altcoin and crypto markets, but looking at, the grander context, because if the economy wasn't so uncertain and people have no idea what's going on with, the stain that we still have on the global economy from the global economic shutdown in March 2020, and then, the out of control inflation that has also been a little bit perpetuated by the fact that we had global logistics, supply chain issues. Factories that also shut down, so there wasn't as much supply. And when you wanted to ship it, you couldn't ship it because the supply routes were closed because of the global economic shutdown. So all this stuff is still lingering, lasting effect from that global economic shutdown, and we're still dealing with that. And so it's hard for economists to look at the markets and say, well, every time this has happened since 1902, we've gone into a recession, or this would happen. It's really hard to really garner whether that's going to be the case or not, because some of these things are naturally resolving, but they're having, it takes a while. You don't just turn the supply chain back on and all of a sudden, the inflation comes down because the supply is readily available. What we need to be aware of is, where is it at? Here we are. What we need to be aware of is there's going to be the Jerome Powell and the Fed and the different world governments and the way they're trying to establish a meaningful monetary policy to ensure that we don't have runaway inflation, especially in the Western countries, here in the U.S., here in the European Union and Great Britain, but all over the world. This has been a topic for global economies globally, is what I should say. And with that being this sort of top-down bearish weight on top of everything, this is why the last few weeks when we're looking at was it Forex Factory, when we're looking every day of the week, it feels like we have the consumer confidence, which could drive things, and then we have the CPI, and then we have the PCE, then we have the consumer price index, and then we have the producers price index. All these things that most people in crypto didn't care about whatsoever 2-3 years ago. Now it's a topic of everyday talks on crypto shows. We're talking about global economic factors because there's where we're at in the markets. Yeah, we had a long bearish market, or not even bearish. We had a long bear market that when we look, and we've all seen, when we're looking at these charts, there's been a 4-year cycle that has been on repeat. And for some reason, a lot of people, the majority of people in markets, when we were pulling up these charts, forgot. We just see this. I'm going to hide all lines. Okay. Let's go ahead and go back to the halving. We got to remind ourselves of this over and over again. These lines, these halvings, right? Now I'm going to double click on the chart, hit auto. When this happened, everybody was so blinded by wanting the $100,000 that a lot of people, even me until about right here, we get so blinded by a narrative in our mind that we forget. We're looking like this. We forget to go like this. Okay. If we see the halving cycles, we see, large, we've talked about this over and over again. I don't want to go too deep into it because there's other things I want to talk about. But point is, this was purely on schedule as, just as expected based on the 4-year cycles of trends. So while we have this global economic pressure, this bearishness in the markets, while we have that impacting what's going on, I think part of it is also a little bit of narrative bias that many analysts, are trying to contend with, while also saying, okay, we have this global economic pressure on things in the markets, but then let's ignore that for a moment. And we can see, ignore that bias and just look at the TA on the chart. Well, we can see that we have post-halving the strongest portion of the bull market. After the strongest portion of the bull market, when you have these strong impulses to the upside, you guys have seen this before. This is 3,900%. This one was 10,000%. This one was 700%. So regardless of if we're getting diminishing returns or not, the whole point is massive gains post-halving. And then from this moonshot, from this massive upside price action, then we get a necessary pullback and it shakes everybody out of the market. We get the boom and bust cycles. And so with the global economy pressures and the uncertainty because of monetary policy and all the things that we discuss on this channel, and a lot of analysts discuss, we have to also sometimes look away from trying to always find the answer and be aware of these things in the news, be aware of what's going on, be aware of Coinbase suing the SEC and Gary Gensler coming under fire from Congress, but then also the CPI data and what they're going to do, what's the FOMC going to be. But there's so much data out there. It's very easy. It's very easy. I got to take a sip of water here in a second. It's very easy to let yourself become blinded by basically like drowning in a news cycle, drowning in all the points, drowning in all the data that's out there. So you need to figure out what works with your strategy, your timeline, and how you can integrate the knowledge and the awareness of what's happening in the news and use that as something to help augment your already established strategy. Water time. Feel like a giant baby with a bottle drinking out of this. Now, jumping into these charts, we had this massive sell-off yesterday that, you know, if you had the charts, your charts laid out. I keep getting a ding in my ear. I'm not sure if it's our Discord or somewhere else. I think we're all good. We had this massive sell-off, and if we have, remember, we spent an entire stream the other day just setting up and mapping out charts and breaking down, trying to find regions that it gave us this sort of framework of where price action could go. You know, and I have these two parallel lines, and this is just from these rejections. This is a rejection. Now we went, you know, broke through this, found support, and came up and found, you know, this basically the mid top side of this region, right in this zone here. We got a rejection. And for those that are looking at these charts, and for those of you that are watching this stream with me and being a part of this channel and being a part of our community, we've talked about this somewhere in this region. There was going to be a necessary pullback that needed to take place. Excuse me. Necessary pullback that needed to take place. So much so that if you remember, and we're going to get to this in a second, I still want to talk about this GDP number. So much so talking about the price pulling back. You know, back in January is when I drew out this potentiality. You know, this is January, must have been about January 28th or 29th. This is where price was. And I was, you know, mapped out this idea of these previous lows was a likely zone for us to find some sort of rejection at. Now, where that's going to reject down to is anybody's guess. You know, we could pull all the way back down to 23,000. We could break, you know, down that even further if we get a lot of bearishness. I'm more in the cards of looking at something a little less bearish, but you know, having this pullback, there's nothing to be scared of here. Just because we had a very quick candle, if anything, a very quick candle gives me, I don't want to say joy is the wrong word. It gives me hope about what is likely to come, because when you get very fast movements, much like this, very fast movement down, very fast movement up. Right here, FTX collapse, very fast movement down, some consolidation, shaking out of the weak hands, and then very quick movement up. Because this is when you get a lot of leverage in the markets, and you also get a lot, this was leverage and fear in the market. So this was a likely trend cycle low when we had this basically, man, I got like allergies or something today. We had this sort of breakdown here. This is post Luna collapse, and then the Three Arrows Capital and all, you know, all this here. And we really were finding a nice floor here. Had FTX not collapsed, it's likely we would have slowly worked our way up to this level, probably got rejected and come down. So the result would have been the same, but we got this collapse here in the FTX. And this was, you know, a cleansing of the space, the over leverage. All these people hoping you found the bottom, go long on 20x leverage. And then not only do they get, you know, basically long squeezed out, but then there's also fear in the market because of what happened. You know, the nature of having one of the largest and most, at that time, one of the more respected centralized exchanges used by a lot of institutional players as well, collapse. Well, we get this very fast sell-off. But then now, what does this mean? This means there's no price interactivity really throughout here, because this sliced right through all this area. So once we really accumulated across, as we can see right here, we formed this double bottom. Excusez-moi. Sorry about that. A little under the weather. Been hustling for you guys. So we can see this accumulation. We got this double bottom, which is very similar to, you know, like a W formation, but this is a little bit rounded, which is okay. We can see this double bottom, but we have this sort of parallel channel that we have here on both on the resistance level here that we have flipped to support, and down here which has just been support. And when we broke down yesterday, when I left the office yesterday for my appointment, and I came back, what I saw was, let me go down to the 1 hour chart or go to the 2 hour chart. When I went there, I basically saw, this is, let's go to the 1 hour. Yeah. Okay. Now, essentially, this is what I saw. Where is it? This is where I came back. I came back to the office and I was like, holy moly. But then, in that moment of looking at this, it was about right here. It wasn't all the way down here yet. And when I saw this, I am a human being. And as much as I've done this for years, it's not like I don't have emotions. I'm like, oh, okay, what's happening? And you have that feeling in your chest, and you had this hope, you had this dream, you had this vision of 50K Bitcoin, wherever you thought price was going. But it's feeling good when it's at 30,000. The positive vibes that you get on crypto Twitter and within the community and the viewership. But then you come back to the chart, and then you're challenged. Your emotions challenge your view on the space in that moment. And then the trick is to acknowledge what you're feeling when you see this and go, okay, the world is not burning down. There's some red candles. Okay, and then what do we do when we're scared? Well, in life or in charts, if you're really scared and you're focusing on something, then you need to, back out of the room. You need to get a bird's eye view. You need to zoom out. And so when you zoom out, maybe you're looking at it on like your phone chart or something like that, and all you see is this may be a little scary if you're just zoomed in on this. But even without any lines, if you just zoom out a little bit, you could say, okay, without even doing any lines or TA, I already know that there's a lot of price action out here. So it looks like there's some sort of support that can be here. Now, if you get back to your computer, if you do some TA, you map out your charts as we've done. I've shown you all how to do this over and over again, and we're going to continue to do it because we all need to be better and we all need to learn. I need to learn. We all need to learn together. But you see, when this broke down, this came down right to these two lines. And if we can't remember what the lines are, then we're on the 30-minute. Let's zoom. Okay, let's get a better view because we're on the 30-minute. Man, this looks like this bull rally was just a giant bull trap, and it's going back all the way down to new lows. Well, let's go to the 4 hour chart. Excuse me. This doesn't look so bad anymore, right? And come out to the 8 hour. We see here, let's go to auto. We see that we have this pretty large support that is, it's got quite a few touch points, meaning it's the more touch points a line has, the stronger that's going to be projected into the future. If you're using this to, like in this case, when this line was here, when this was projected out, there was a rejection here, but now coming down, see, we're finding support on this level. And even yesterday on this massive sell-off, look at this, came right down to this region. This wick came right to this local spot right here, and basically just wicked right below it. Now, if we come back down to the 30-minute chart, we can see that this went right below it. Now, if we advance this one or two candles, look at how fast that bounced. That was on a 30-minute candle, boom, came back up to the 382. So now what we want to do, what our goal is today, is to, you see how this played out? It came down, bounced on support, rode up, found support on the 382. It was like kind of unshaky grounds, is it bullish? And it did push up, small bearish pullback, but support on the 382, push up, rejection at the 786. It's almost like it's taking stairs, right? And then pulls back down, actually loses this the golden pocket here. So we want to pay attention to this, and we want to see, I'm going to let this play out and see where exactly this is now. But this is broken down, found through the golden pocket, has gotten rejected through the golden pocket. So let's see where it resides now. Well, this is what this is. See, you see how this is interacting right around this golden pocket level? But what I'm seeing right here though, already, and I hadn't done TA on this for you guys in the before I got on because I wanted to do this with you. We have a trend line forming here on the 30-minute. Now I'm going to make this a not as bright, so we know it's on a smaller time frame. Here we go. Now we can let this play out a little further and see where we're at. Did you notice that? I drew this line when it was right here, okay? And then as the price came up, it was respecting, it just bounced and bounced right off this line. And now it's broken through it. Look at that, finding support on this line. So where's the play button? Okay. So what we see right now, let me exit this. What we see right now is an interesting predicament for traders, because we got to really, man, it felt good yesterday. Throw a one in chat yesterday if you had those dollar signs, Bitcoin symbols in your eyeballs, in your mind, where you're just like, yeah, man, it's getting back to 29,000. You know, it's gonna hopefully touch 30, and then you get that rocket, just red candle, just SpaceX ship just exploding and just falling down, and there's part of you that's like, oh, damn it, But when we have a strategy, it's not so frustrating. But the predicament we're in now is that we see here that we have these lower highs that we're forming. We also have a trend line right here. A little bit. Let's see. So we have these lower highs, which is starting to build a bearish case. And we have to be aware of that. There's a bearish case, there's a bearish narrative, there's an underlying, bearish momentum that could be accruing some speed and some velocity and some loss of confidence from bulls. The more bulls lose their confidence, the stronger the bears get. Now, again, that's not the end of the world, because when we come back out here to the 8-hour chart, we can see that we have all these levels below us that we've talked about. I mean, the golden pocket from this entire move would be all the way down here. Actually, it's a little lower than that. This is the golden pocket from this specific move. So we're going to do option F, alt F if you're on PC. It gives you a Fibonacci. And we see the golden pocket from this entire move here. And I think what would be more appropriate is doing it from this sort of this low here, because this is where we broke out from. And we can see the golden pocket is right at where these lows are. Okay, we have this rejection here, support here. If this loses this zone where we're at right here, if we lose this zone, I'm going to delete some. No, if we lose this zone where we're at up here, we can still retest this 27.4 area. Okay, is this? Let me look. Yeah, we can retest this and lose this and still come down. I mean, really, we can come down as low as, this golden pocket right here, which is also the 786 of this move. And, it would still be bullish, theoretically, because we have formed this bullish impulse with higher highs, higher lows. And if this were to roll over here, this area right here, this would be the high. So we have this sort of top, right? Then we have this top and we have this low. And if this were to come down to this golden pocket, then we would still have a higher low. So it's not the end of the world if the price action does what we know is healthy, which is this move right here. If you're going to push up, at some point you have this push up right here, right? Well, this uptrend is made up of smaller pushes, pullbacks, pushes, pullbacks, pushes, pullbacks. Some of them are 7% pullbacks. Some of them are 20% pullbacks. We have to take every step in this journey methodically and without the need for something to actually play out. Because if we look back over here in 2015, we've talked about this. This is similar. This is picture the FTX collapse being right here. Okay, the sell-off. We have this double bottom, sort of formation, but this one went quite a bit more sideways. But we all know, hindsight, right? We all know that all of this was an absolutely excellent time to buy in terms of, come on. Why is my chart not going out? I don't know. My chart's not scrolling. There we go. We knew that this was an excellent time to buy. Let me know if, throw in the chat right now. Let me know if there's any lag on the video. For some reason, I think when I have the live streaming Discord, 3 different charts up with multiple charts on each chart, I think it really puts my computer through the ringer, and I've got a pretty fast computer. I want to make sure you guys aren't having any audio visual errors. Karen Swigart Harris, I need clarity after a crazy day like yesterday. Yeah, that's what we're all trying to find together here. BRB Frankie update. Oh, shout out to Frankie Candles and welcome back when you come back. Matt C, my boy, I hope you're doing well. My point being is here, 2015, this was an excellent time of accumulation right in this zone. Now, the thing is, this is what I want you to pay attention to, is when we look at this, we pull up the measuring tape right here. This move right here, 42% pump, and then we got 35% dump that went below. I mean, we had a new low here, even though from this zone here, we had a new low, but we were still forming this base. If I were to guess or approximate kind of where we're at in the cycle, if it were to compare to 2015, 2014, it would be somewhere in this range, kind of right here. Because if we look at this, we had these two attempts. This is similar to the $25,000 breaking, this sort of zone right here. And then the breakup, you know, the push up, breaking out of that zone, and then pulling back. I'm thinking we're somewhere either in this sort of part of the pullback or somewhere up here, right? And either way, it doesn't matter. You don't need to be so worried about missing a move in Bitcoin and crypto, because if you are worried about missing a move, you're going to make silly errors and silly mistakes that you could have prevented large losses on, and risking your capital and putting your capital, you know, basically into the hands of other people that, you know, have a better plan than you do. We want to identify these low zones. And if the price goes up and pulls back and we feel like we have a strategy for what's going on, then we can take advantage of that, because we can see right here, this was, let's see, 125% breakout to the upside, and then a 40, just shy of 40%, actually, what, about 40%. Let's see, yeah, 41% to the downside. And then after that, shake, look at this. This is a lot of shaking. A lot of shaking out here. I mean, this doesn't look like a lot when it's small. We know how small the prices were back then comparatively. Look, $344. See this on the right? So if this, you know, this oscillation, this is a basically 15% range going up and down. This is just eating people's profits alive for breakfast in this sort of zone. So we want to be patient and look at our supports and know what's going on, so we can take advantage of, if this is dipping and we think that we're at this, you know, accumulation zone, likely going into a bull market, and we very well could go sideways. You see how long this went sideways? This went sideways for 266 days. Luckily, I think we're sort of past that part of the market. I think we're, you know, even right here, once we broke out, I want you to notice this. Once we broke out to the upside, let's zoom in on this. Once we broke out to the upside right here, you know, massive gain, bull market's full back on. And then people, you know, massively capitulate here, huge sell off. But then I want you to look at this range from essentially, let's do, where's the, or parallel channel. I want to show you here. We've got this sort of strong sort of accumulation range that really had no price action, from $340 up to $460, sure, but you know, all the way, this was here. 212 days. You see this? And it started back here at $335 and it ended 211 days, only $100 higher, about 25% higher, right? So we have to be okay with very strong bullish impulses. Now let's get back more active to where we're at today, because what I'm trying to point out here is we can't just expect, because of bullish, some bullish formations have formed, that we're just going to go, you know, directly into a parabola. I'm going to delete some of these Fibonacci's because it's too much. It's too much. Okay. We need to be patient. We need to notice that we are having this pullback, push up, right? Breakout. And we need these to wash out the market to get strong bullish impulse. We, you know, look at this. We broke down. We're getting strong support on this zone right here. Now, the question is, we do need to do a fib from here. Option F is, what is going to be the interaction at this level? Can we actually break through? This is on the daily. Let's go back to the 1 hour. We're sitting right below this golden pocket right now. And if we have really lost this area, then I would lean towards this probably coming down and testing this zone again if we can't break through this and over the course of today, I would say break above it and maybe even consolidate above it, but break above it and hold above this area. Excuse me. Now, if we look at the indicators, let's go to the 4 hour. Zoom in a little bit. All right. Look at what we got here. So I want to actually look for. So what you see is, now I'm going to need to double click off that. So we need more price action on the chart so we can see the volume, this information. Okay. So what's concerning for me is, on the one hand, we do have this level of support that has acted as support. It's kind of tapped a few times here. If we lose this case and we have fully formed, rather than this being a bounce, pullback, and a continuation through, if we have truly lost this level here and we have formed a new higher, lower high here, we lose this level. If we come down and test this, you have to understand that the case for the bears is only increased with each lower high. There's less confidence from the bulls. Bulls that have had conviction are like, you know what? Well, you know what? The GDP came in, which is gross domestic product. I cannot speak today. For QE was 1.1% on an analyzed basis versus the estimate of 2%. You realize for the GDP of the U.S., 0.9%, just under 1%. That is, I mean, I don't even know what is the GDP of the U.S. 2022. Let's look at this. 25.46 trillion. So what is 1% of 25.46? Right? That's still it's huge amount of money in terms of missing it. That's the being under what the economists were thinking we are going to be at in terms of growth and business and the revenue that the country generates. And so as Bitcoin, which I would love for it to be uncorrelated from traditional markets, as we're getting these lower highs and we see the GDP, we're still growing, but it's not at the estimate that they expected. So are they trying to create these these estimations so that we have more, so that Jerome Powell and the Fed and the FOMC meeting and what they're going to do with monetary policy, are they stacking a deck one way or the other? We don't know, but we're coming in below what the estimates were going to be. And in Bitcoin itself, we're seeing a sort of move towards a almost more bearish narrative because we're forming these lower highs. Now we've tested this. If we lose, this whole point was, this was too long-winded. I did not sleep well last night. If we lose this level, we have this large volume node right here. So if we lose this level and test this, one, we have to realize we fell through a large volume node, a lot of interest, which is a bit more narrative for the bears. But if we do that and retest this line, I'm leaning towards I don't want to call it a directional bias, but the data I'm seeing is leaning towards a likelihood of a test lower. And the concern I have with that test lower is when we zoom out on this, we can see, if we're looking at the VPVR, which is this here on the right, we can see this is all the volume that was traded at the price level that you see on the right side of the bar here. And the concerning thing is if we lose this level, look at this gap. This is that gap we were talking about before when we were talking about way back here wanting Bitcoin to break through this previous level. And we talked about if we break through this level, because there's little price interactivity in this region right here. So if we lose this level here where we had a lot of price action and there's no sort of volume interest below us, then it's very likely that if we do lose this, that we're going to get that resolution down to the retest of the $25,000. Now, what I will say about that, and I want you all to hear me when I say this. The funny thing about it for me is I'm talking here more specifically, if we're looking at a 2-hour, 4-hour chart, I'm talking about the bearishness of the smaller midterm and smaller term time frame. Because we have to remember, This market cycle, and I've said this over and over again, and I'm going to continue to do it. This market cycle plays out on the macro, the midterm, and the smaller local, smaller time frames. And so when I'm looking at the 4-hour time frame or the 2-hour, whatever, we're seeing this, let's ignore everything that happened before it. If we're looking at just this right here, this is starting to form a little bit of a downtrend because we're getting lower highs and lower lows, right? So now the next step in this would be high, lower low, lower high, lower low, lower high. What's next step then? Lower low. And if we lose this and actually form a lower low, then we would on the smaller time frame, this 4-hour and below, this would be starting basically a downtrend, right? Which would be, remember, this here on the smaller time frames. But all this to say, in reality, for me, as bearish as this is on a smaller time frame, I am loving this because this is exactly what I had mapped out before, because we need this pullback. On this one, mine goes a bit deeper down to, it looks like about the 23,000, about the $23,000, $24,000 range. Now, this was just an approximate drawing, so this specific area wasn't a target, but this pullback is exactly what we need. If we do lose this level, we clean out, we flush out the last bit of weak hands now, and that's not going to be you. You're not going to get shaken out because, if there's some government selling pressure or some Mt. Gox transactions, which I saw there was some speculation of, that could have been the big sell-off yesterday. But when we're looking at just the technicals, in this case, it doesn't matter why it happened. We know it happened quick. So it was a large entity that then also triggered stops for longs that got liquidated going short. So not only was there a lot of selling pressure, that selling pressure was amplified by the fact that there was leverage coming back into the market and washed it down. Because, right here, this was so scary, right? Oh, it comes down, and then people get so excited because we start pushing up again. So a lot of people, the open interest starts really going up here. Let me see if I can pull up. I'm going to delete, and we're going to add. Let me see. Open. Oh, it didn't work. There is an open interest. Let's see. Not the one I wanted to see. There's a one I used to use that really showed you basically a graph of the open interest. And essentially what I'm talking about there is the leverage coming back into the market. Open interest, meaning people opening contracts that are, waiting for the resolution to the upside or downside to because they're betting long or betting short. And when you start seeing, this explosion to the upside, you see people just wanting to be part of the move because of FOMO. And we can't trade on FOMO and fear. FOMO and fear literally takes your money and donates it to somebody that's trading without FOMO and fear. They're buying your fear and selling your FOMO. That's essentially what big money, smart money is doing. So then look at this. Now we have, very little price action, just rocket ship to the upside. And then the sell-off, massive sell-off, taking advantage. Some big whale out there, maybe a few, just huge short here, or short or sell, I should say. It was a sell that then led to a lot of longs here getting liquidated and big dump. We have held here, but on this bearishness, if this does resolve, as I said, and come down here, because we have not broken out of this massive, important region, this $25,000 region, 24,000, see, about 24,450 up to 25,230. We have not tested the top side of the zone. We can do this right there. We can put a line here. Let's make this a bit brighter so we could see it. Okay, I'm gonna make this blue. Let's make it green. Because if this comes to this region, I'm adding to positions in this zone. Anywhere in, where's my square boxes? Anywhere in this region here, make this green. Anywhere in this region here, I would be, I mean, really, anywhere in this region here, I would be a buyer. Because remember, and I actually have to move this up now. I can tighten this, and I'll show you exactly. We've talked about this before, but this blue line, I actually want to see where it is. We got to go through all our data. Is the looknode.com. A lot of great free content as well as paid content, but a lot of great charts here on for Bitcoin. The cycle valuation, I want to look to short-term holder realized price, because we've talked to, actually, you know what? I'm just going to pull it up on. Now you can see here, this is critical, right? Once we break through short-term holder realized price, strong bull market. Once we lose it, strong bear market. Once we break it, strong bull market. And so what I'm focusing on right now is the line in the sand for me of being bullish really is if we break the short-term holder realized price with velocity and volume momentum, meaning it wasn't just a leverage flush out. And you can see we did test it here, but we didn't get quite down to it, but we did bounce, strong bounce. And so where we're at today, at least 2 days ago, it was 24,120. You see how quick this has moved up? Even, you know, let's see, this is the 24th. So let's go about a week back or so. It was, you know, moved up almost $1,000. So even if we hold in this region, this short-term holder realized price is moving up into that zone that we were just talking about. Not only was this previous resistance, I really, as bearish as this may feel on a short-term time frame, this is giving me more indication the longer we're kind of in this trend to the downside that we may be coming down to this level. And we don't have to hit this level. We don't need to do it. But my point with all of this, and I want you to hear me when I say, when you're able to map out a chart and see key levels, and although price started pushing very bullishly and it feels good, if you don't look to what the pullback opportunities are going to be before they happen, the pullbacks are as scary as they could be, and you feel like a fish out of water. Your emotionality gets triggered. You feel like I need to sell before it drops again, because everybody, we have PTSD from when the market did, you know, did this number here. Let's go back out to the daily. We have PTSD from when the market, come on, computer, when the market did this, you know, just down, down, down. And then we got relief, and then down, 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 and then, oh, and then down. It's like, it just never stopped. It's like, oh my God. And a lot of people got in this region here. And by the way, if you got in, I want to know, and this is not an embarrassing thing. This is actually, I got to give you ultimate props in the world. If you got in anywhere of these levels, if you got in above, if you got above 36,000, I would say if you got in, not over here, but if you got into the market, your first time buying crypto was when Bitcoin was around, you know, above 31,000. So above the support zone, any of this region here, let me know in chat. Throw a funny emoji in it. You can put whatever emoji you want, an angry bull or something. But my point is, if you got in here, this was super exciting. And then it was like, what have I got myself into? And then it was like, okay, no. Yeah. Super exciting. And you probably added along the way up, because if you got in here and it pushed up, very few of those people had enough knowledge at that point to, when it crashed, one, to have taken profit, or two, to have it be back down at a price you previously bought at and have the confidence to buy at that level again, because you just saw how far it fell. Most of the people that buy in these regions, when it pushed up, when it came back down, you actually considered selling or may have sold below what your entry was, only to have it bounce to then rocket, and then you buy at a higher price and then it comes down. So when we see this, when we have an understanding now of looking at the roadmap on the chart based on previous price action, based on our technical indicators, based on our Fibonacci's, based on short-term holder realized price, using the on-chain data. And again, everybody, how many people are in here? We got 200 people in the room right now, 105 likes. Hit that like button, hit that subscribe button, ding that bell, be a part of our community. And again, I just want to shout out I'm just pointing out all the new content that we're bringing to the BitLab Academy. We're launching this website. We're in the process of getting all this done. It's while I'm here. I leave May 5th, so it's going to be before that. So get involved, because I want everybody to, this course right here, this on-chain analysis, as much as you may think that you don't like on-chain or it doesn't give signals, what on-chain does is not give you day trading signals. what on-chain analysis does, much like when we're looking here at the looknode.com, looking at the short-term hold to realized price, you know, looking at the average price of all coins that have moved within the last 155 days. So all the short-term held price and short-term hold wallets, what's the average price of Bitcoin for those holders? This gives us a really great metric. And I mean, there's all these, there's 20 different lessons in the on-chain course. But what's nice about this, the on-chain course, is it gives you an understanding of what the behavior of smart money does and what dumb money does. And let's be honest, we've all been dumb money. And sometimes, in some cases, we are still dumb money. We make good decisions only to follow, like, you know, I guarantee you there's people out there. And if you've done this, let me know. If you've done this where you had a really solid trade, you made like, you're like, it doesn't matter if it was 1,000 or 10,000 or even $100. Let's call it a percentage. Say you made a 34% gain on a trade. And man, you feel like, yeah, I finally got it, right? And then what we do is we kind of forget our principles. We forget our fundamentals. We forget our strategy. We forget what our plan is in the markets. And then we start playing fast and loose. And then we end up losing that full amount and maybe even more than we had just won, where we could have just walked away for the day on that 34% gain. Okay, take, you know, at least half of it, 30% to half of it, put it in your long-term holder folder, right? Take it out of your ability to trade, take it out of your ability to risk your capital, and then you leave the other part of the profit in your trading folder. Now you're building that and building your long-term holder portfolio at the same time. But the point is, when we're using on-chain data analysis and we're using strategy and we understand what the different people in the markets are doing and why they're doing it and where they're doing it, and they're looking at fundamental data rather than the price, then this pullback doesn't become scary. This pullback becomes opportunity. And that's what I want you all to be aware of, the opportunity that this is presenting. And we're getting a higher likelihood that this is going to come here because we had these lower highs on the smaller time frame, but even on the daily, we're starting to, you know, we're having that curve as well. And we can see on this most recent pullback, we shot past the golden pocket, but we are below it. And the fact that the bulls cannot, they don't have enough steam to continue higher. This is looking like the continuation. So now that we have the plan, then we can look at that. We got the plan. So everybody throw in the chat, what coins you looking at? What's the last trade you did? What pair to what pair? Were you long? Are you sure? Let me know in chat. Let me know down below in the comments below. If you're watching on the Hit Network, shout out to everybody over at the Hit Network. Thank you also to the Hit Network for all the support they give with this channel. But make sure you're following all these socials down here at the bottom. Here. And you know, check out BitLab Academy. And if you haven't yet, come over to the BitLab Academy Twitter page here at Academy of BitLab. Follow us over here. Retweet this post, these daily posts. Hit the like button. You get entered to win some great stuff. We have the new courses coming out. You know, all the new content, indicators, bunch of updates coming to the indicators, and you get a chance to win stuff every Friday with this. And you get another chance to win stuff, by the way, if you come to bitlabacademy.com and sign up for this email list right now. There's a great email that I'm putting together that's going to be exciting, that you're also entered to win courses and indicators on this, as well as getting the info that's in these newsletters. Now, did you throw into I want to see some of the, you know what, let's look at, I see Eric Browning, you put CTSI, Cartesi, long. Let's look at, this is going to be, we still have another 30 minutes. This is going to be Total Request Live, baby. Let me know what you want me to look at. We've got a great context, and I apologize if anybody feels like I was being long-winded on what was going on with Bitcoin. It's because we can't just look at the price action and wonder what the TA is doing. We need to understand what the psychology of the market, the psychology of healthy strategy is around these moments, so we can address that we felt scared right here. And we can admit that we almost wanted to FOMO right here in because we saw the bounce, but then it went back. We said, oh man, I'm so glad I didn't FOMO there. But then as soon as it started going up, most of us did not have a strategy in place to see this W pattern right here. And once we broke past this, you know, so a lot of people got in right here because now they're FOMOing. They want to front run all the way to the top again, only to have it reverse. And it's just like, it can be emotionally exhausting. So we need to understand what we're thinking, what we're feeling, and what the likelihood of what other people are feeling. So that's why I wanted to really go into this quite in depth and looking at these levels below us and seeing that it's not the end of the world. This is actually the start of a better opportunity. That's what this pullback is. It's okay. Now, if we do break out to the upside from here, this on Bitcoin, this level right here, this previous high, 30,404. If we cannot capture this, then this is just potentially another fake out. But we need to see momentum on this. Now, we're going to do the actual TA on this, and then we're going to go through all these coins. So, all right, now look at this. We're on the 2 hour. We're getting some bearishness on the hidden volume here. I'm going to take my face off the screen so you can see. We're going to break this down using the BitLab trading stack. If you are interested in these indicators, all these indicators of market intelligence, BitLab hidden volume, BitLab relative extrema, BitLab significant movement, all of these are algorithmic indicators that are reading a number of other indicators and data points, aggregate, for instance, all the momentum, whether things are overbought or overvalued or undervalued, with the red waves overvalued, blue waves undervalued, helping you pick out the formation of trend tops or trend bottoms, even within a move. So we saw this redness coming all the way up. That was signaling you that there might be a move coming. So then I would have come down here on the 1 hour and looked here. So we have this redness all the way in, and then we get the money flow, bearish divergence on the money flow right here. And then we have we fall all the way through the EMA ribbon. I do like that we've come back up, but looking at what's likely now, we did have this trend line. We broke out above it. We barely, it's a small trend line, but we broke out above it. We're kind of trading sideways. So what this looks like right now, option J or option T, is there any sort of formation here? It's a little bit curved. It's a little bit, it's a little kind of ugly. Could also be, this is very similar yesterday to what I was talking about. Remember the diamond pattern? This almost feels like a diamond pattern again, except we don't have the left half of it, meaning we don't have the test on the way up here. But despite that, this kind of looks a bit like a diamond pattern, right? I would do this, maybe we can go to the candle bodies. Now, these can be reversal patterns when you have this, because you have the expansion of bullish and bearishness and then contracting. As it stands, I'm leaning bearish because of the lower high structure. So I'm going to look for lower targets. If this does break to the upside, I'm watching this level right here, $29,000, basically $30,000. If we cannot break the 786 and $29,030, then I'm looking for this target, and then likely back down to that $25,000 region. Now, let's do Cartesi. We're going to total request live. Let's do it. Let's get into all of these different coins. And some of it's going to be fresh because I don't want to go through all my different charts to find. And this, look at this. This is on the 1 hour. I don't know if you notice this. There's some bearishness brewing on Cartesi. Why do I say that? What's the bearishness? What are we seeing here? Our first step first, before we look at our indicators, we can double click on this, hide the indicators. We can look at the price action. Strong bullish impulse, strong bearish retracement, strong bullish impulse, but double top here. What do I mean by double top? M formation. Where's my, here it is. Let's actually do this. M formation, right? So top. Now, even within this, go to a smaller time frame. We can also see, I'm just going to put an arrow here. We see that we have this sort of double top within the double top. So my point with all this is we have essentially we have a head and shoulders right here, right? And we have a double top within this. And so what I'm looking at on this is we need to establish what our neckline is. It's funny. The neckline is like the point of control. Look at this. It's pretty crazy. Where's my line? So come across here. So now what we want to do for this now, and I think Cartesi's been suffered sort of over the last year and a half, a little more than it should have. I think Cartesi's a great project. I feel like I have pepper in my eye. So what we want to do here is measure this from the highest point. We can do it all the way from the candle wick. I think to be a little more conservative is do it to the candle bodies, because this is on the 1 hour chart. So if there's a wick on the 1 hour chart, that's just a lot of, it's almost like noise. I'm not going to look at that. So I'm going to do it to the candle bodies. And we take this and we measure this from breakout right now. This is holding up a bit Let's move this down here. So what I was just doing is I was looking at the 1 hour chart and I was like, okay, well, where's the price action? I don't have a roadmap. So let's zoom it out a little bit. Let's look at these levels. Yeah. Option J. Look at this. Top of the morning to you. So, okay, this is important. So we've lost this level here. This is a high, previous high but from before. Okay, get off my screen, volume node. So this is important because we have a head and shoulders with a double top within the head and shoulders. So it's almost like, I don't want to call it a super head and shoulders. It's not that at all because this is just a bearish structure in itself, but it's reinforced with this double top information within the head of the head and shoulders. We've lost the neckline, okay? Not only have we lost the neckline, we are also below the previous high. So we've lost the support of this previous high, which we very well could have bounced on, but we sliced right through it. We did bounce on it here, but then sliced through it, and now it looks like there's bullish attempts trying to make this happen, but we do have to look to the targets below us, and the measurement out of the head and shoulders is all the way down to here, which would be this high perfectly. You see this wick right here? But I'm thinking I would look for this level, option J. I would look for these three levels. So because of these previous price action highs, if I were to short this, I would be looking at, I have, perfect targets right there because we have previous highs. And then the last thing we can do here, we can kind of do it from, let's do it from about here. Option F, bottom to the top. Now let's kind of look. Yeah, we can do this all the way to the top here. And we can see this has come down and retraced from this all the way down to the golden pocket, right? So this made sense. This has made sense minus this bearish structure, this, reversal pattern. This pullback has gone to where we could have predicted or you had high probability of it going, which is this golden pocket. So it came down to this. Now it's trapped between this previous high, this previous resistance. It's trapped between the previous resistance and this golden pocket. If it loses this level, I would be looking at the next level down, which was 2036 and then 1917 below that. Now that we've done our price action, now we can look at our indicators. Now, okay, so remember, we said this was bearish. Now, when we look here, I don't know why. There we go. When we look here, we can see that we have the inverse head and shoulders, but we can also see, even if we didn't use patterns, we can see on the BitLab hidden volume right here, we've got, several bearish divergences in volume, meaning there's not as much volume to support the interest in this price action at this level. So there's a divergence in volume versus price, which is one of the strongest and best indicators you can really look at, because if there's not volume interest, it's not real interest, okay? And so this broke down. So we had the pattern, but even if you do patterns, you just use indicators, we see lack of interest and the relative extreme is sticking out, and it was overheated on the red wave down here. Now, once we started breaking down, okay, we broke up, bounced up to the I think this is 786 or 382. I mean, yeah, so it bounced up to 382, lost, once we started losing this, a lot of relative extrema just showing a little bit of unhealthiness to the price action to the downside, which is a little bizarre being that there's all this bearishness. This is how choppy the markets are right now. People are trying to figure out, there's a lot of underlying bullishness and hope, but then there's a lot of very quick bearish action. And so as we're holding here, what I want you to notice, we're in a fairly tight range. Let's go to the 1 hour. We're in this fairly tight range. And if we saw that, were we on the 8 hour? You notice this on the relative extreme of how far out of these bars are on the opposite side of this aggregate momentum wave. This is showing that there's inherently some bearishness sort of charged in the, stored in this price action right here. That either price action just needs to cool off a little bit, meaning not having all these oscillations. See this? Pop, 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 pop. This is very uncertain. Relative extreme out on both sides, but dominating with bearish divergence on the volume. And then we actually get the three bearish divergences here. If we cannot hold this level, basically we're at a volume node, but also this golden pocket. If we lose this level, we'll look below us. If we do push up above this, then the first level above us would be this 382 again, which was at 28 cents, which is, quite a move from where we're at now. It's, what is that? the 20% move back up to that. So it's not a small move. Now let's see. I'm going to look at the what happened to my screen. Okay, I'm going to look at the chat. See, you know what? I'll give you Solana. I'll give you Solana, people. I'll give you a look. I don't think we've done Solana on this channel before. I had my own problems with it, and then I had my own problems and judgments of it. And I was like, you know what? People can make money with any asset they want. If you like Solana and you've done your diligence, even if maybe you just like it for the short term, an asset's an asset. And I think, and I have to admit to myself, part of my negative sort of story in my head about Solana has to do with some of the affiliations with Sam Bankman-Fried and FTX and all that, but it's two separate teams. You know what? I'll give it a shot. So let's do some TA here on Solana. Let's take it out to the daily first. Okay, we got option T. Option T gives us the trend line. Now look at this. Great retest. Option T. If you're on PC, again, every time I say option, it's alt. So alt T. So we've got this falling wedge. This is a daily. Now this is looking a little interesting here. I won't call this an inverse head and shoulders. It kind of is. It's at an angle. If this were to break out, this is just first look. I don't think I've ever even done TA on Solana. I'm not saying this is going to happen, but this is how you would measure it. So let's give some people some hope today, right? So if this were to break out from there, from this inverse head and shoulders, that would be a 278% move. Now, I don't think that's going to happen overnight. I think this pattern is probably less likely to play out as it is this larger falling wedge here. So let's look on a more realistic local time frame. Let's pull up the volume. There we go. Now we're looking at the 2 hour. There's a lot. It's very, a lot of ranging here. I'm going to turn off the hot. You know what I can do actually? I'm going to double click on this. That's not what I wanted to click on. There we go. Going to there we go. What I wanted to do. Now, I'm going to turn off. So what I want to do here is we can see that we're kind of in a channel here. Where's my parallel channel? Bam. Let's see if there's any rhyme or reason to this. So this fell out, but we've got a bit of a channel. It's not perfect. This might make it a little better. But we're essentially accumulating sideways here. Now, as we come into this level to where we're at right now, we can see that there's choppiness with the volume interest where it's bullish divergence and bearish divergence, bullish. And it's not an error it's not an error on this indicator. What this is actually showing you is that there's no decision. There's no conviction from the bulls or the bears. And not only do we see that with this flip-flopping of divergences between the bulls and the bears, we can see that just by the nature of having a sideways accumulation zone, okay? So we're accumulating sideways, but what we have to be aware of, remember, zoom back out. Look at this. I'm going to make this a bit bolder so we can see it. We're coming into this level right now. And so we're accumulating into this level. And if the market as a whole does decide to push up, then we have a very strong possibility, a very high likelihood of breaking through the zone. Also, look at the daily, okay? Right here, looking at the daily. We have 3 bullish divergences on the MACD histogram, the relative extrema, and the momentum. In addition to that, we're getting some bullish divergences on the volume on the daily, okay? So there is a little bit more of a bullish narrative on the daily. And we can see, look at these relative extrema bars. Even though this is flat, look how far out to the downside these are. These relative extremas to the downside, it's almost like underlying bullish pressure that wants to push up. Or another way to look at it, probably a more accurate way to look at it, is these candle bars. Even though they're very small bearish attempts, it's very unhealthy. It's not supported by the actual underlying bearish pressures for the price action to have gone there. So, in other words, there's underlying more bullishness than bearishness. So the bearish candles are kind of unfounded. And so we can see this, and this is on the daily, mind you. So look at, this has been out for quite some time, and this was overheated. It has flipped back neutral. I'd like to see this flash blue as well. What's up? What's up, Frankie Candles crew? How you doing? We got the raid coming in the house. Shout out to everybody. We're looking, we're doing some total requests right now, a bunch of TA talking through how and why we're looking at certain strategies. So welcome to the channel. If you haven't yet, hit that like button, hit that subscribe button, join our family here. And if you have never met me, my name's Kelly Kellam. Welcome to the BitLab daily stream. Now, getting back onto these charts, I do want to shout out though, if anybody that just tuned in, come over to the BitLab Twitter page, follow us here and retweet our daily tweet here. You're going to be entered to win. We draw tomorrow. People that follow us, like and retweet these daily posts, you get entered to win. It could be lifetime membership to the indicators, could be lifetime membership to the academy, all the new courses, all the stuff that we have, all these new courses we have in the new academy that's getting launched. We're doing it. You get entered to win all this stuff. It might be a multi-month membership, might be $100. We've given away all kind of different stuff. So come over here to the BitLab and retweet this to be entered to win. Now, coming back to the charts, let's get through a bunch more of what's going on. We have this accumulation on Solana. We're coming into basically the bullish pressures are bringing us towards this resistance line, this macro resistance line. And so it's kind of, Solana's been a little bit behind the curve of a lot of the other coins. So does this mean that there's some underlying explosiveness that's going to come once we do break this level? On the daily, using the BitLab trading stack, we can see here, right here, we have the relative extrema is showing a lot of bullish pressure is starting to coil up under this. This is flipped gray. We'd like to now see it flip blue, which would be the next step. We do have the bullish divergences, so let's go down to the 4-hour and see where we stand. It's kind of flip-flopping back and forth, and this is to be expected as we're getting into a tighter consolidation into this zone. Once this breaks out, it probably will be fairly quick. So this is something that if you were to trade this, we can come down to the 2-hour using, we can, come on, auto. Okay, there we go. So I wouldn't trade this just yet. I would let this consolidate and move into a tighter range here. Into it. Where's the price line? I would like this. Like, where's my price line? So I would like this to consolidate a little tighter into the range near this line, because even the move from where we're at here to this, and this is for somebody that's trying to make a longer term pay. If you're scalp trading, I mean, in reality, you could be scalping this whole consolidation. But I'm doing longer term position buys. So my strategy would be to allow this. One, we can see that we have a bit of a trend line here. So, and let's see, option T, quick keys. We got a falling wedge here on the 2-hour. Okay, you can probably also see it on the 4-hour. So we have a falling wedge here, which is supporting this bullish narrative. So you don't need to wait for it to break all the way out of this. What you can do with this falling wedge, which is bullish, and we have remember on the daily, we saw that coiling bullish pressure, and we see it right here too. This relative extremist signaling the downside. I could, see a trade on this being, where's my long? Basically the breakout of this position here. Zoom in here. I always forget, by the way, I don't know what it is on PC, but on Mac, you can press Command and just zoom in and not have the screen go all over the place. I'm going to do that for you guys more, so we're not shaking the screen, giving you an epileptic seizure here. So I could see this once we break this level, coming in and having a tight stop on this, kind of right below this line. And depending on the velocity of the movement, when we do break this level, it's either going to be, break the level and probably come pretty quickly up to test, this high area here or this high, but right around the region of this resistance. If it's weak, then it might come up and give you what you really want, which is like this, to where then you could take advantage of the retest, the breakout, retest, and then you could take your trade very conservatively. Smarter way to do it. You're more consistent in your profits is taking your trade like that, where then our entry would be breaking this high, this previous high pullback, and once we break that, safe entry there, and then your stop loss could be, depending on how high this goes, it would all be relative. Say this is kind of like this. Then we could trade about right there, and our stop loss could be just below whatever this candle pullback would be. That would be a good trade. And then you could look at option F to the bottom, we can see that there's likely, I would take some profits off the table. I would take some profits off the table right in this region right here. Let me rephrase that. I would move my stop loss as this came up and tested this golden pocket region, because the golden pockets have been such a high hit rate for what's going on in the markets that I would move my stop loss up to just below this golden pocket as the price pushes up. Because if this does get rejected, it will likely come up, get rejected, or consolidate for a period and then come back quite quickly. So I would, if I took this trade and front ran the breakout of the macro falling wedge that, you know, that we see here. My computers, my charts have been so funky lately. Come on, there we go. We could be front running this. So if you are going to take a trade of just this small breakout into this region, which you very well could do, I mean, that's a 14, it's a fairly large push from there. And then you can reassess, moving your stop loss up along the way until we get into this region. And then once we break out, then you have you've already set, you've taken advantage of this. Now that's Solana. Let's go ahead and if this does break down, I mean, we have plenty of room to the downside. So if this does break down, let's go ahead and delete some of this stuff. So we could see. Last one was accident. If this does break down, I would look option J. We can kind of see this. It's the bottom side of this parallel channel range. So if this does come down, I would be looking at retesting this zone down here, 2046. If we lose this, I mean, the saving grace is going to be right below us in 1992. If we lose 1992, I'm thinking we very likely will test back down to this region down in here, this 17 to 1650 range. That's if we lose this. I think if we do lose this, it's probably going to be more likely a washout wick like this and then come back up, come like this. But those are kind of the things I'm seeing on Solana. It is looking, we do have the larger sort of very flat inverse head and shoulders. But it's just accumulation into this key resistance here. Now, let's go through the, did Jerry Springer die? Oh, R.I.P. Jerry Springer. Let's see. You know what? Let's do a couple of the big boys real quick. We didn't do Ethereum yesterday, so let's do Ethereum. Let's bring up the big doggies. Bring up the big dogs. Question is, have you hit that like button, hit that subscribe button, and ding that bell? Come on, be a part of our community. Drive this stuff forward. Where are we at? What's our likes at today? We got 238 people watching, 150 likes. Let's get these likes up, baby. Come on, I'm pouring my heart and soul out to you here. Waking up early, killing my back. I need a backiotomy. Now let's jump back in here. Okay, we're looking at Ethereum. Similar sort of washout yesterday. We had that strong push up to the upside. And then sharp sell off only to, it's like a heartbeat, right? Push up, sell off. It looks just like a heartbeat. Why do I say that? What does a heartbeat look like? Push up, go back down, right? Comes back to about the median of that range, right? And what happened? Push up, went down lower, and they came back to the median of the range. The market is alive, baby. But what I'm seeing here, this is first concern. This is a 1 hour. Okay, that's not as bad. I thought we were on the daily, and that would have been a concern. So let's go on the daily. So this is looking a little better. On the daily, the hiccups. We're stair stepping to the upside. We got a little bit of a rising. We have a bit of an ascending channel. Ascending triangle, meaning we have a flat top here with an ascending support line on this region. Now this is pushing up in this region here. Now what we can see on Ethereum is that we do on the daily, we have bullish divergence on the hidden volume here, which is nice to see on the daily because this can be good news in combination with seeing the relative extrema is the bearishness is unfounded. There's some underlying bullish pressure. This is neutral. It's not overheated. We got room to run. So let's come down to the 4 hour and get a better local look. Now let's do option F or Alt F if you're on PC. That gives you the Fibonacci. So what we want to see here is, okay, this bounce, it wasn't like Bitcoin had a pretty strong bounce up to the 786 all the way up here. Ethereum came down, but it had a pretty weak bounce only up to this 382. So this is actually there's like this mixture of, on the daily, the bullishness in general stepping up to the upside, but, and the bullish volume, but coming down on the 4 hour, it's looking a little weaker because this bounce, it's getting almost head and shoulder vibes, but not quite, because we're not really having a left shoulder and a right shoulder, but similar, where the bulls are making attempts, coming back, and then strong bullish attempt, and then coming back sharper, weaker bullish. So we're having a high, higher high, and then lower high. So this is looking a bit weak. And we look at this. We're starting to get a darker bright red, flashing, overheated. Now it's coming down to the 1 hour. Yeah, even on the 1 hour, this small movement that wants to feel good. This is like a health check. This small movement, you want it to feel good, but we see this strong relative extremist candle sticking out. Doesn't mean that this can't keep going up, but this is just kind of like a warning shot that maybe there's some weakness there. Okay, there's not the underlying pressures that we want to see to sustain continued upside. We want it within the cloud like this. You see how these bars are out of the cloud, and then we get a little bit of a consolidation, and then once they're in the cloud, that's fully in the cloud, this is just consolidating. But then we start pushing really strong here, right? And once this is out, it needs to come back in and consolidate. So this is out with such a small move. Is this going to consolidate from here? Everything is just hinging on all the news that's come out this week. What is today, by the way? There was the GDP came out Thursday. So we got advanced GDP. We got unemployment claims. So this is interesting. The unemployment claims are better than expected, but this is going to be worse. This is going to be worse for what's happening with the narrative with Jerome Powell, monetary policy. So the market is looking like the undecided sort of data that we're getting from all this economic news. We're getting a bullish push with the strong sell-off, and then, the consolidation and the accumulation, but then, another bullish push with the strong side. The market is looking and feeling uncertain. We see this also here on the dominance. Bitcoin dominance is coming right back up into this range. I'm wondering, are we going to break out of this range that we've been in for a couple of years now and find new highs? Are we going to, not new highs, but are we going to break this range and get into the 49 to 50% with Bitcoin? Because we're looking at altcoins right now, right? We did a whole hour almost on Bitcoin. But looking at the altcoins, we have to realize that if Bitcoin dominance is going up, then that means Bitcoin is asset to be in over most of the altcoins you're in, because that means Bitcoin is performing better. That's why the dominance is going up. Its market cap is moving faster than all of the, the index of all the altcoin market cap. So we have to pay attention to that. So let's look at a few more. Now, this is one of the more important charts. I think we're looking at this towards the end, but you should always check this, even if you look at it towards the end of your analysis. What the heck? There we go. That is this USDT dominance. We pushed up. This is that sharp pullback that we had the other day down to 27,000. And then just right here, the large push up. The USDT dominance, if we lose this, I want to not only lose this, but I want the USDT dominance. Probably going to come down, test, and then continue to the downside. If this were to play out, this is going to be indicative of a probably very good price action for our crypto assets. Now, Ethereum, this is looking a little bit weak. If I were to guess, this would likely see a bit of a pullback and retest, the 1839. If we can't hold in this region, then I think if we can't hold in this region, then I think we may be going lower. Let's see how low. How low can you go? Let's do option F. We can delete this because it's in the way now. We can come up. Now, the golden pocket is all the way down here. I don't think we're going down to 1646 unless the market is really tumbling. But I think if we lose this level, that we will test probably, this range right here is highs, because there's highs and lows. Actually, there's highs here, rejection, and there's support here. So if we lose this level, then my target would kind of be in this region here. And we can see this kind of comes all the way back here as well. So 1740, 1730 would be a healthy range to the downside if it were to pull back there, and it'd be a buying opportunity. High volume shelf, golden pocket. Yeah. So if we do push to the upside, I mean, the only target we really need to be watching if we push to the upside is we have to look at, let's come back, take this off, go back to auto, double click on the chart, minimize our other indicators. We can delete, come on. I put my computer through the ringer with all these charts open all the time because usually I have it like this with like 3 different tabs with multiple charts on each one, and my computer is just exhausted. Option F, we saw that. The golden pocket, I would want to see if we do push up higher, the target to watch for is basically the $2,000 level. Not only is it the $2,000 level, round number, but it's also happens to be the golden pocket. So golden pocket is 1994 up to 2005. So we have to watch this. This is our, if this breaks through this and supports, then we can look at, testing this previous high, regional high. If we reject here, then we're going to come back and test here and likely go down to that 1740. Now let's look at Cardano. We got to throw Cardano, throw ADA in the chat if you're a Cardano holder. I had about 800,000 Cardano, and wait for it. And I did make a good trade, but I sold it from about 1 cent is where I got it, 1 and 1.5 cents. Sold it in different batches between like 4 cents and 8 cents. And then got back into it about $1.20. Felt like such an idiot. And did take some profit on that again when it got up north of $2.40 or something. Then I sold it all. This is not when I had 800,000. I had long sold since sold. Nice little bag, good bag. Sold that from 3 when it dropped. I sold it about $1.75, and then got back in Cardano when it was about. I don't remember what the price was. I can tell you by looking at the chart. It was about 31 cents, or no, it was below that. It was. Let's see, weekly. It was in this region right here. So about, I was right, about 27 cents. I remember I was trying to front run the breakout on this, and I was like, I'm so stupid for trying to front run a breakout because this was also before the market really started moving. But I was like, the markets, these are some good prices. So I was just a man of my conviction, bought, and now I've at one point almost doubled it, and then it's now pulled back. I'm not really trading Cardano. I'm accumulating at certain zones. So let's go ahead and look very quickly. Let's go to the 8-hour Cardano. This is looking a little bit better than Ethereum did because of the structure is just looking a little healthier. Because Ethereum was similar structure, but this was way lower, and it was below the 382. And this is already fighting past the 0.5 fib, but it also might be depending on where we're drawing the fib from. Because if we do it from this breakdown, from the actual breakdown of this candle, then we're technically testing golden pocket. I think it's probably more appropriate to do, I would say, from this move here. So this is looking a little more bullish, but we are also have this massive channel, this rising channel here. And the thing about that is what had happened was we broke down below that, and we did find support on this other projected out trend line here, support from I showed you all this yesterday. But we're finding we're going to find a little resistance because we have not only the golden pocket. Yeah, chart. I got the chart up now. I got it. It's coming. It's going to be about 10 seconds. So long story short, we have a rising channel here. We've fallen below this channel. We have the golden pocket that we've broken. We have this that we've broken down from. We're testing a little higher. This is looking a little healthier than Ethereum did. However, we do have this massive level of support that has flipped to resistance to where we're at right below it. And it's the golden pocket is right at the level of where this support is. So this is going to be a kind of critical juncture on the smaller term time frame. If we get rejected here, we could very well consolidate sideways. I think there's inherently a little bit more bullishness with Cardano right now, especially with the development of a lot of the stuff on the DeFi side of Cardano. There's like I think it's like 12 or 1,400 projects are building on top of Cardano currently, which is it's going to really drive a lot of use on their chain and a lot of adoption as the TVL, total value locked, and the DeFi space really explodes. So if this does break out of this, then I think, I mean, we're very bullish on Cardano. If we break above this, then we're back in this channel. And then the next, the targets above are, back in the 47s and the 50 cents. And that's great. If we lose this level, we do have this support right below us at about 39 cents. If we lose this level, then our next target below would be about 35 cents. So with that being said, sorry about me not having the chart up. Too many screens here sometimes. I love you all. I appreciate you all. Hit that like button, hit that subscribe button, ding that bell. I really appreciate you all. Come over here. Make sure before you go, come to the BitLab Academy Twitter page. Follow us. You got to follow us and retweet these daily tweets and hit that like button. You're going to be entered to win. We're doing the drawing tomorrow, 10 a.m. To 11:30 a.m. every day, Monday through Friday, here on the BitLab Academy daily stream. I've got an incredible guest that I'm bringing on next week. He's so big. I think what will likely happen is I'm going to likely release the guest and the interview on BitBoy channel, so it gets as much exposure as possible because he's such a solid guest. I'm just honored to have him on. I'm not gonna say who it is until next week. But love you all. Appreciate you all. Everybody, make sure you come in before you leave. Come give me a follow on my page right here at Kelly Kellam, and BitLab Academy is where it's at. Give it a follow. I gotta go. I'll see you later. Adios, muchachos. Adios, muchachos. Thank you for coming. Like button, subscribe, and be my friend. Adios, muchachos. Thank you for coming. Gonna go lay down and take a nap and heal my throat so I can do these streams all over and over again. Gotta take care of yourself, everybody. Love you all. Adios.